number 51 on the top of page 457, 657, 6-57, number 51, Jose purchased a vehicle for business and personal use. In 2017, he used the vehicle 18,000 miles, 80% of the total for business, and calculated his vehicle expenses using the standard mileage rate. Mileage was incurred ratably throughout the year. He paid $1,400 in interest and $150 in property taxes on the car. Calculate the total business deduction related to the car. All right, so let's see, we're going to look in number 51 at the miles driven. The problem uses 18,000. I changed it to 20 for purposes of the demonstration. So 20,000 miles in 2017. Standard mileage rate for 2017 is 53.5 cents. He only used it 80% for business. Interest cost is $1,400 on the vehicle, and that's legitimate business expense. And then the property tax on the car as well is a legitimate business expense for $150. So what we're going to do is, as a way of calculating the total, is first we're going to take the miles, in this case it's 20,000, and we'll multiply it by the rate of 53.5 cents. We're using the standard mileage rate. And then to that, we're going to add, I should say, we're going to, I'm just going to change something here just for a minute as I look at my formula. Make sure I have that right. Okay. All right, and so we're going to take the percent of vehicle used for the business, and we're going to multiply that by the interest of $1,400. And then we're going to also take the $150 in taxes and multiply that by the 80%. So we only get 80% of this deduction. We only get 80% of that deduction. Remember, the mileage is actually calculated. These are the actual miles driven for business. So there's no proration proration needed here because these are the actual business miles. So we don't need to take 80% of the product of these two because this is, again, the actual miles. However, the interest costs, as I said, and the property taxes are shared between personal and business use. Therefore, we need to take these expenses and multiply that by the 80%. So you wind up then with a total of, in my example, of $11,940. Again, just to review, 20,000 miles times 53.5 cents plus 80% of 1,400 plus 80% of 150 gives 11,940. Number 52 deals with allocating between personal and business use. If you have any questions on that, let me know. Number 53, one point I wanted to mention about this problem is that when you're dealing with a loss, in this case, one point to remember is that if the President of the United States declares it's a natural disaster, that has some serious tax implications for business and homeowners as well, both business and personal use real estate or property. Because what that allows the taxpayer to do is it allows them to take a deduction against the previous year's tax return so they can get a refund and get recovery dollars coming in more quickly than if they waited to take the deduction in the year of the disaster. So that's one point I wanted to make. You get that benefit. The other thing I wanted to mention is that when you're calculating the loss, in this case on a building, equipment, and a barn, when you're calculating these losses, you're going to look first at your adjusted basis, and then you're going to look at the damage before and after, and these are complete losses. Right? So because they're complete losses, then you will take really the net difference, which is the 85,000 less the recovery of insurance proceeds. So when it's a complete loss, you use your adjusted basis, in this case netted against the proceeds. So that's your loss for a complete loss, and that's true of the the equipment and the building. It's the adjusted basis less the cost recovery by virtue of the insurance payment. That's your net loss for those two. Now, the barn was only partially destroyed. So in this case, we have to look at the difference between the adjusted basis and the change in fair market value. And we'll take the lower of the two. All right, so if we look at this case here, we have a $95,000 adjusted basis on the property, only partially lost. Okay, and then we have the difference in fair market value. And then we have those insurance proceeds that we have to offset. So we'll take the minimum of these two, and in this case, if we were to add 15, that's going to be 50,000, which is the difference between these two. So 50,000 is less than a 95. So your reduction in fair market value is the 50,000. 50,000 minus the 35,000 is 15,000. So that's our loss on that partial loss on the barn. The change in fair market value minus the insurance recovery, the proceeds, it gives a net loss of $15,000 on the barn. Add these together, and then the total loss of this disaster really was $98,000. And again, we're able to take part of that against last year's taxable income by filing an amended return, for example. Okay, and the rest would be in the current year of disaster. We covered most things. The only thing I wanted just to touch upon, the last thing here, is just to remember when calculating, this is problem number 56 found on page 658. And so here, we're going to look at, this is a self-employed individual, so they, again, have to pay both the employer portion of self-employment tax and the employee portion. However, they only have to pay 92.35% of those expenses. So using my adjusted data for problem 56, I'm using $196,000 of self-employment income. Social Security tax on that, it's going to be, Social Security is 6.25% for the employee, 6.25% for the employer. So we'll take 12.4% multiplied by 127,200, because remember, the Social Security is only taxable up to earnings of 127,200. Well, this exceeds that, so we're not going to apply that rate of 12.4% against the entire 196. It'll only be against the 127,200 limit on Social Security. Then on to Medicare, there is no such limit, as we said earlier, for Medicare, so it's going to be 1.45% employee portion, 1.45% employer portion, and we'll multiply that by the 196. So how much of self-employment tax is there? We're going to add these two together, and then, as I said earlier, we're going to multiply the total of these two times 0.9235 or 92.35%. And that'll be our tax. Our deduction, therefore, will be half of that, the employer portion. Okay, so calculate the values of Social Security tax subject to the 127.2 limitation. Calculate the Medicare tax for both the employee and employee portion again. Multiply the total of this by 92.35%.
I'll give you your final answer.